Well, I've been presenting on how one can still generate sufficient income in the current environment of low yields. And actually we've been presenting on multi-asset income funds, BNP Paribas L1 multi-asset income, and how one can still achieve an attractive yield of 4% in a sustainable way by being invested over various asset classes in a very well risk-controlled way. So that was the angle that we took it from. It has become more challenging, of course, over the last couple of years. That's also why multi-asset income as such has become very popular, because income, which previously was mostly generated by investing in government bonds, which gave you a decent yield and you could easily roll over your holding into a new one and sustain your yields. But today, unfortunately, that's no longer the case. So you need to look for alternatives, and their multi-asset income is actually a good answer to that, because it gives you still the possibility to get the income that you require, whilst only taking a small additional risk into your overall portfolio. And that was what I brought forward here today. One of the most heard questions I got was actually, are you still able to get your yield in a sustainable way? And don't you need to take too much risk, additional risk compared to before, to get there? And there today the answer is, well, yes, you need to take a little bit more risk, but not that much. And actually it's still feasible if you make the right asset mix to get there. And that's also what we have shown throughout my presentation. Also, one of the features that you clearly see is that over the last couple of years, and especially the last years, we had to start to diversify even further, look for new sources of potential income, and be flexible in our allocation in order to get there. But we're still getting there, and the yield figures are still sustainable. However, it has become much more painful for us as well to get the yields at lower risk at these times. But it's feasible. And that was the main message, and they were quite interesting to that. And also a second question which popped up quite oftenly was why we actually are hedging our currency risks, where the answer is not that difficult to understand. If you know, as we are being a global multi-asset income fund, we are actually generating our underlying income through dividends and coupons from all over the world. But these are cash flows in local currencies. If you do not protect them from FX rate differentials over time, your yield becomes unstable that you have obtained. Although in local currency terms you would have obtained your 4% yield, that could either be much higher or much lower depending on which direction your FX risk is going. And that's one of the main reasons we are actually hedging our currency risks in order to have more stability and more predictable yields, which we are currently need to have to distribute. The boardroom setup was actually very efficient, and in that sense you have a limited number of participants, 8 to 9 people per session, which also makes it more easily to get an interaction. And that was something you easily got. People were actively asking questions throughout the presentations, and in the end without any problem. And also the fact that it was the speakers who were moving between the boardrooms is actually very time efficient. Most of the times you see that the speakers stay in the same boardrooms and the delegates are moving. But time-wise, it's not efficient. Otherwise, on the other hand, with the speakers moving from the operational point of view, it's more difficult for you guys to get everything in time right. But that was actually worked perfectly. And it was actually the setup as such worked very well and very well organized. First time I did it in this setting, and it worked quite well.